So if you think the GTA real estate market is expensive today, wait until you see what is coming in 2026. Tens of thousands of homeowners are heading straight into the biggest mortgage renewal shock in modern Canadian history. And most people have no idea how unprepared they are today. Some people will survive, some will honestly drown, and the market will split in a way we've not seen probably since 2008 really. Today I'm going to show you exactly what's coming, who will get really hurt and who will win, and whether we're heading in for a price collapse in 2026. Now let's officially begin. For those who are new here, welcome to Living in Greater Toronto area. I'm so glad you found us. My name is Clement. I'm a real estate broker here in the Greater Toronto area. This channel will talk about everything residential real estate, whether it's buying, selling, investing, and all the hidden truths that people hear about. And in today's video, we're going deep into one question most people have, and we can say some are afraid of asking. And this is, will GTA home prices crash or will they rise in 2026? So here we go, the truth explained. Let's get into it. Here's the reality. 2026 is shaping up to be one of the biggest real estate turning points in the last 10 years, really. And here's why. Tens of thousands of mortgages taken in 2020 and 2021 at that 2% rate or 1.2% rate are coming up for renewals. Many of these homeowners are going to be faced with that 4%, 5% sudden raise in the interest rates. So monthly payments could rise by $1,000 to $3,000 really, depending on the type of property you have. And the shocking part is that pain does not hit in 2024. Some of them might not have felt the pain in 2024 or even this year, 2025. It is all going to hit at once in 2026. So before I get into giving you the answer, I want you to think about something here. If 30 or 40,000 homeowners in the Greater Toronto area suddenly have to renew at a much higher rate, what do you think would happen? Do they either sell? Do they default? Do they try to either refinance their mortgage? Or do they turn the basement into a rental per se, just to help with the mortgage, with some of the income coming in? What would you do if your payments jumped $2,000 overnight? Comment below. Let me know what you guys think. Let me know some of your stories. I want to hear what some of the people out there are really going through, because it's one thing, I'm in the business, I can see what other people are feeling, but let me know, buyers, sellers, investors, renters out there as well. Just let me know what you're thinking. Now, let's break down the actual truth. What are some of the forces that could cause a crash? And here's reason number one, the payment shock. I did a video on this, by the way, so just go into my channel. You'll see the thumbnail, payment shock. I know it brought in some controversy. Look at that video. I really talked about this in detail. A homeowner paying $2,500 a month may suddenly now pay $4,000 for that same home. A homeowner paying $3,800 may suddenly pay close to $6,000, depending on obviously the kind of property you're getting into or the kind of property you have in it and the equity that's there. And this right here, for some people, this is your entire income, the entire household income, husband, wife, income for that home. So yes, 2026 could trigger desperation selling. This is not a surprise. We've already seen some of this here in 2025. But reason number two, which is the inventory pressure. When enough stressed sellers list at the same time, prices correct faster. Buyers negotiate a lot harder. Properties sit for much longer in the market, and the fear literally just spreads a lot faster as well. And here is where the downward spiral just could start like crazy. But again, this is only half the truth, to be honest. When you look at reason number three, investor liquidations. A lot of GTA investor own, like, let's say pre-construction units, assignment deals, negative cash flow condos losing $500 to $1,500 a month. If they can't carry this renewal plus the negative cash flow, the next automatic thing to do is to sell. And this could add more inventory to the market. So what forces could push the prices to go up? Now, here's where people get really shocked. Counterforce number one, Canada is still pushing high immigration levels, and the GTA absorbs the majority of immigrants. More bodies means more renters. More buyers mean more demand. Demand does not just disappear out of thin air. Number two, low freehold supply. Freehold properties, I'm talking about detached, semi-detached properties, freehold townhouses. Toronto is not building enough freehold homes. Even in a slow market, there's always demand for detached homes, semi-detached townhouses in very strong schooling zones, because these assets do not collapse easily. Now let's look at counterforce number three, and this is the possible rate cuts. I just had a conversation today with one of my clients who has 4 properties, and he was looking for tenants for he was looking for 3 tenants for one of his properties because he's renting it as per rooms per se. And we had this conversation, and he's having a hard time finding the renters. And I just kind of gave him some strategy on how to go about this. But he also added to me that he's excited, or he's looking forward to next year when the interest rates are going to drop, because that will help them a little bit on either they might want to get rid of one or just ease on the monthly payment. So this is a conversation I'm having with some of my past clients. And if interest rates begin falling in early 2026, the same people panicking today will jump right back into the market. We could go from fear to hesitation to a massive buyer surge almost instantly. One thing I've noticed here in the GTA, markets don't move slowly, they just snap. In 2021, you can see what happened in that time. 2017, 18, you saw how the market snapped, and you can see what's going on right now, how the reaction is. Let's get into the truth nobody wants to hear. A crash or a boom. It will be both. But let me explain this. And here's the real truth here. In 2026, the GTA will split into 2 markets. This is how I see it. This is from the research that I've done, but this is how I see it. The market will split into 2 markets, really. Market A, which will be the pain market. This is where you will likely see prices drop. The condo assignments, the high-rise condos with huge maintenance fees, houses bought at peak value with low down payment, those 5% down payments as well. The investor properties in oversupplied neighborhoods. Bad idea for now. These areas could see real decline, even 20 to 25% in extreme cases. We already experienced a little bit of that of 2025. This year, we're going to see a lot more of that in 2026. This is where price collapse becomes very real. And market B, this is the safe market zone. On the other side, we may still see rising prices in desirable freehold turnkey detached homes. Houses in top school districts, as well as areas with naturally low inventory. These areas will always do good. And also renovated homes, as well as entry-level freeholds under that 1 million range, particularly if you're in really good pockets. These are always areas that will be in demand. So the real question isn't, will the market crash? The better question to ask here is, which part of the market will crash? So now let's look at the opportunity window here. 2026 could be the biggest buying opportunity since 2008, really. And I know, let me explain. Buyers, you want to keep cash ready. Stay pre-approved. Watch distressed listings. Look for urgency. Wait for the news. Most of the time when you see it on the news, it's already too late. But this is where you want to be connected. Let's say I usually have an email list for some of my clients. I have a custom search. I know exactly what some of my clients are looking for if you're looking to buy. And once anything good comes about, because I already know your criteria, I already know what you want, I'll always send it to you as an opportunity. And it has worked for some of my clients this year where we've been able to jump onto an opportunity. But these are clients they're already ready. We already had them approved. If you have cash ready, you're good. If you're pre-approved, you're in really good position. Now, and for the sellers, do not wait until you're in a desperate situation. Time your sale before competition really explodes. Price correctly from day one. Understand, buyers in 2026 will be very aggressive. So maximize your equity now, not far much later. Sellers on this point, a lot of times, like I've mentioned, you want to price your market, you want to price your property correct from day one. How you're able to do this is obviously you want to look at the comparables and don't take it from your own personal situation, or you say you've done this kind of renovations and you price it according to that. The market will not lie to you. The market will tell you the value of your home, and typically the price is set by the buyers, not by the seller. If that throws you off, just write a comment and I'll reply to you on what I mean by this. But with sellers, you don't want to come into the market emotion. That's what I'm saying. Don't wait until your situation gets really bad. Understand what your situation is today and plan correctly. If you want to be a part of the people that I'm going to, because I'm sitting with all my past clients in January, where we're going to discuss all the equity updates. We're going to discuss all their plans on what they're going to do moving forward. You might not be my client watching this, but you might be interested in something like this. There's a link in my description down there. Just fill it up and I'll be able to get to you. So now let's get into the final part. This is my prediction. So will home prices crash or rise in 2026? Here is my honest opinion and what I generally think would happen. So for condos and investors, there will be pressure there. A lot of forced selling will be happening and possible decline. I mean, we've already seen a lot of decline this year. Now, with freeholds and desirable properties, this will be stable and it will rise, but it won't be a drastic rise like we saw in 2022 or 2021. It will be a rise from this year of 2025 to 2026. Then buyers with cash, right here, there's massive opportunity for you. Massive. Because there's going to be so much inventory, there's going to be so much those distressed sellers who are going through situations. And if you're a buyer with cash, you're good to go. And for sellers who wait too long, there's potential of loss of equity. I know this is money you don't have in your pocket, but you'll feel the pinch of having lost this big amount of equity. So for those sellers who time it well, there's huge upside before the inventory really spikes. So 2026 is not the year to be passive. It's the year to be aware, strategic, and very much prepared. So if you're in the greater Toronto area and you want clarity on your specific situation and not just the general market, reach out to me. Every year I help families, investors, and first-time home buyers build strategies around the market. And 2026 will require a completely different level of planning, guys. And I'm here to help you whenever you need. Just go to my description. There's a link down there. Reach out to me and I'll be glad to help you. Make sure you like the video, subscribe, drop a comment down below, and share this with someone who needs to hear the truth before it's too late. My name is Clement. I'll see you in the next video.